Last week, Gary said gold bears are running the show. Let's see what he has to say this week coming up on Chart This. And joining me now is Gary Wagner. Gary, thanks for coming on today.
Thank you very much, and my pleasure is always to be here.
All right, Gary, last week with Daniela, you said that gold bears were in command. This week, we've seen a pretty decent pop in gold prices. Are gold bulls maybe now in command?
You know what? We have seen the market really run down from 1391, break through 1300. The bears were absolutely in control. The key number that I was looking for was 1232. We were able to miss that. It came close, but really never got to that point and bounced off of that. The fact that we found support in that area is a very positive note for the bulls.
Last week you mentioned key levels being 1141, 1181, and 1232. Now, with the rise in gold prices this week, have those levels changed?
Well, the levels really haven't changed. As I said, 1232 was a critical number to hold, and we did hold that. That's, of course, after we broke 1262. That's a 61% retracement. The next level up, which is a 50% retracement, would be 1288, and that's the key number that I'm currently looking for before we can say what we're witnessing isn't just short covering and a little bit of safe haven buying, in other words, a counter trend, and we could actually be looking to move into a bullish scenario.
Let's touch on Iraq quickly. This was a big news item yesterday, likely to be in the news for the next little while. Now, what kind of impact do you see this having on gold prices?
Well, you know, we currently have some geopolitical uncertainty. There's no doubt about that. And the fact is that when you combine that with some tepid economic numbers, a weaker US dollar, you're developing really the perfect storm, or the type of scenario you're looking for that could push gold higher.
Excellent, Gary. Let's see what you got for us today.
Well, what we're looking at in terms of the insert today is this most recent rally is a very interesting type of rally. I've identified basically three different types of rallies. The first one is parabolic. You get a very, very quick price increase, a large price increase over a short period of time. The second type of rally that we can experience is one in which you have a stair step. So it moves up $1, down 30 cents, up $1, down 30 cents, and so on. And that's a stair step. The third type of rally that we've identified is exactly what we're going to talk about in the insert. It's a little bit different than the two previous I've discussed.
All right, let's take a look.
On today's video, I want to try and cover a couple of different topics. First topic is going to be when we do experience a rally. I have identified three different primary characteristics or types of rallies to look for and how to differentiate between the three of them and what they mean in the big picture. And the second is to discuss techniques to identify pivot points. Now, in terms of rallies in which we see price move higher can really unfold in a number of different ways. And first of all, the most dramatic of all of those ways is simply called a parabolic price rise. Now, a parabolic price rise, just as the title suggests, is one where you have a dramatic price ascent in which you see price move drastically higher over a relative short period of time. When you identify a parabolic rise, the one thing that most often occurs following a parabolic rise is a demise or a parabolic fall. In other words, when the market heats up, rises too quickly, you tend to see it fall just as quickly. And you can see this parabolic fall here, and this is following the parabolic rise to our record top at $1,900 per ounce. Now, the second type of rally, and realize this can occur in a micro or macrocosm. We're looking at a daily chart, but you can see this occur on a daily chart, on an intraday chart, on a weekly chart. But the second type of price rise is a typical stair-step manner. And in a stair-step manner rally, what you're really looking at is you get a price ascent, you get a retracement, you get a price ascent, you get a retracement. Here the market trades sideways for a little while, but in essence what you're looking at is a market that is stair-stepping up, and it follows very, very closely to an Elliott wave scenario of impulse moves in which you have three primary impulse waves which are broken up or in between corrective waves or counter waves to the trend in terms of the rally. Now, the third type of rally or price rise that we can experience is one in which we have the market spurt, or you get a quick move up and you get sideways trading action where the market consolidates for a little time. Then you'll get another spurt and then some sideways trading action and then a spurt. And I believe that that is the kind of rally that we are currently witnessing. If you look at how the market has reacted ever since it hit that bottom just above, call it 1235, we have really seen that kind of activity. So what we got was on Thursday of last week, we had a dramatic rise. Then Friday and then Monday of this week, we had the market really trade sideways. Then we had that spurt. That was Tuesday. That was followed by yesterday's trading activity. Of course, this is being recorded on Thursday with Thursday's market activity. But you had a dramatic rise, you had a sideways trading market the following day, and then on today's market you had another dramatic rise. Now, of all of these three types of rises within the market, I feel that the most stable of all of these types of rises is what we're witnessing right now. In other words, a spurt consolidation in which the market absorbs the higher prices, sideways trading activity, followed by a spurt, and then sideways trading activity followed by a spurt of activity. The reason that I feel this is the most stable is you're not getting any kind of retracement. It's showing the support is very strong. It's simply consolidating in between these price rises. Now, on this most recent rise, there were two different techniques that we really used in combination to be able to correctly predict the pivot point of this marketplace itself. We recommended our clients got long at roughly the 1252, 1253. That was after the first rise itself. And what I'm going to do is convert this standard candlestick chart, which shows true opens and closes, into a Japanese average chart, because the Japanese average chart can really give us an indication of key reversals and pivot points. We've talked about that in the past. So I've just converted it. And then when we look at our daily chart, we can see the following. As we witness this dramatic price move, and this was the dramatic price move down after we broke from the compression triangle and we broke to the downside. Look at the body sizes on these Japanese average. Again, this is a daily chart. You can see that they begin to wane as the body sizes begin to compress. You get this pivotal candle, almost doji-like, very, very small bodied candle, and then you get a change from color in terms of red to green. That's our real indication. Now, the following couple of days following that, you really didn't get a large body candle, but by the third green candle, you actually lost this lower tail, and that, of course, is what is critically important. This is today's trading activity in which we saw the market break above the minor resistance at 1262 and move higher, and you can notice that over the last couple of trading days, we have lost this lower wick, and what that signals, or what that means, is that at no point did it trade below the midpoint of the prior day's candle. Another technique that we use for the identification of pivotal and key reversal areas are candlestick patterns. And we have identified and have been looking at the fact that what we have seen over these last 3 weeks in trading, this of course is a weekly chart right here, and what we have noticed is the formation of a 3-river morning star. Large red candle, a star gap at the bottom of this, and a large green candle. In fact, our subscribers know we watched this form, and as this was forming, even prior to it breaking above this minor resistance level at 63, this of course being the 61% retracement level, we looked at the fact that we were probably seeing the formation of this type of pattern. As always, viewers of Chart This are welcome to join us for additional bonus content and additional information on this subject. To receive the bonus content, simply go to our website, goldforecast.com. Click Chart This after the show. From there, you will see a link that will allow you to create your free account. You do need to be a member of After the Show. It's absolutely free, but once you're a member, it will allow you to go to the bonus content section. Again, different types of rallies and ways to identify key reversal or pivot points within the market.
Thanks for joining me today, Gary.
Thank you very much. I want to wish all of our Chart This viewers prosperous trading and investing next week. We'll talk to you real soon. Bye-bye.
And thank you for watching this edition of Chart This. If you have any comments or questions, you can always send them to newsfeedback@kitco.com. Have a great weekend.